Rating agencies are important players in the financial industry. Traditionally, financial rating agencies assess credit risk by assigning ratings to public or private issuers of securities. Investors use these ratings to evaluate the risk of default and make their investment decisions. Since the late 1990s, new players have emerged: extra-financial rating agencies. Extra-financial rating involves evaluating the environmental, social, and governance policies of companies, states, or other types of security issuers, such as local authorities or supranational organizations. Extra-financial rating agencies rely mainly on public data from companies, public documents, questionnaires, phone contacts, or meetings, but also from other stakeholders, such as NGOs, governmental organizations, unions, and the media. There is no standard framework for extra-financial rating. Each agency develops its own model. However, all agencies rely on the same international standards, which ensures the enforceability of the criteria. Companies are analyzed according to three areas: environmental, social, and governance, also known as ESG criteria. These areas are broken down into several criteria: workplace accidents, energy consumption, greenhouse gas emissions, and also compliance with standards such as the principles of the United Nations Global Compact. Each criterion is then analyzed based on the policies decided by the company, the implementation of these measures, the reporting of actions taken, and the performance of these actions carried out. Based on these analyses, the agencies assign scores for each of these criteria. Then they calculate an overall score for each company. The choice of criteria and the weighting systems between the criteria may differ depending on the industry sector. For example, greater weight may be given to CO2 emission criteria or to the range of specific vehicles for automobile manufacturers. In response to the growing demand for non-financial information, three major international financial service providers, Bloomberg, MSCI, and Thomson Reuters, entered the market at the end of the 2000s, viewing the integration of ESG data as a promising area. This growing integration of extra financial services by traditional financial data providers has continued, as seen in the partnership between Bloomberg and Sustainalytics in May 2014. The extra financial rating market has already undergone several phases of change and consolidation. More and more players have entered this market. Others have disappeared, most often acquired by a competitor. According to a detailed assessment carried out by Novetic, there are currently around 40 different extra financial rating agencies.